Well, here we are, beginning of March, February's gone, and it's time to look at this crazy market we've got called Halifax. Let's dig into some stats. Hey everyone, you're here because you know that basically every single month we put out the real estate stats here in Halifax real estate market so that you can be the informed buyer, the informed seller. You can get all of the information about the stats because the neighborhoods, the markets are what are truly key right now, because there's definitely some hot markets, some hot neighborhoods, some hot price points that are not everywhere in the whole of HRM. So Richard Payne here from Halifax Homes and Lifestyles. We want to give you the education and tell you what's going on, because we're now 2 months into the brand new real estate market in 2023. We've got an interest rate announcement coming next week on March the 8th. Let's see what the Bank of Canada do about that one, because you know we're at the all-time high record interest rates that we've not really seen for like lots of years. So it's going to be interesting how inflation and how the interest rates actually kind of are feeling the pinch on each other, because from a buying point of view, like let's get straight into it, buying point of view, like it's still a really tough market. Like we've done multiple offers, we've seen houses that have gone over asking that, you know, I don't totally understand why they've gone over asking and there was that many offers. So it's still so key from a buying point of view that you've got to be hot. You've got to be straight in there. Like we're not seeing that many houses where it says all offers in by. There's been a couple recently, but we are definitely seeing the please leave all offers open for 24 hours or 48 hours so that other people have got a chance to see the house and compete with you. So that is still happening, and definitely therefore another way to get multiple offers on a property without saying all offers in by Sunday 6 p.m. or whatever the date might be. But that's the buying point of view. Let's get into the stats and then we'll cover a little later on like how it feels from a selling point of view. So the average price point right here in HRM for February, we are now at $538,252. Let's call it $538. So how does that compare sale to list price? Well, we're at 99.4% sale to list price. So the average list was 541.5, average sale 538.2K. That puts us, compared to January 2023, that puts us at plus 1%. Not really that huge amount of a difference. And we've certainly seen us kind of hovering around that 520 to 540 number now, since I think we did the stats and I was looking at some stuff. I think it was like August last year. We seem to have like just been like going like this, basically around that 530 to 540 range. So it's not really changing too much, but we're definitely starting to get to that price where list and sale price are becoming a lot closer. There's markets that have gone over that, absolutely, but that's what we're really seeing is the sale to list price is basically getting to be the same point. Now, when we compare that average price point, 538, to February last year, yeah, we are down 12% on last year because it was $611,000 in February 2022. So down 11% last year. So that gives you an idea that, yeah, February, well, we know that kind of May, June was really the peak of last year, and we're definitely coming down off that peak, as shown by the fact that we're basically hovering around that 530 to 540 average price point. So when we look at the number of days on market, because that's another key thing that has definitely been increasing, and I know that we've got clients that we're working with right now, and we are deliberately looking for houses that have been on the market kind of in that like 30 to 40 day range, because that gives you a feeling that maybe the sellers didn't get the activity they were looking for. Maybe they did have an offer that actually got terminated and fell through because of inspection or financing or something. And what happened then is property comes back on the market. First thing that everybody asks when a property was conditional and comes back on the market is like, what's wrong? And that is definitely a question that goes through the buyers' minds. Buyers then say, well, if there's something wrong and somebody else didn't like it, yeah, time out, we're off as well. So that is a big factor. So we're at 31 days on market right now. We were at 47 days on market in January. So we've improved from there by 34%. But when you look at February last year, that was 20 days on market. So therefore we are plus 55% on last year's days on market. So houses are absolutely sticking around a little longer. Now, let's talk about builders and new construction, because they are definitely increasing the days on market. Last year, Last year, 22 and probably 2021, a lot of the builders were just not putting houses up for sale. They just weren't doing those facsimile listings anymore. They were literally going, we'll wait till we're like a month, 2 months away from finishing the house. Then we'll put it up on the market. We'll get a bidding war. We'll sell in 2-3 days, something like that. And therefore it never happened. Now the builders are back into that stage where, do you know what? They're probably not flying off the shelf as quick as they used to. So they're definitely putting facsimiles out there onto the market. And basically the house hasn't even started construction. Foundation has not started in most cases. So in that instance, then we're going to see that increase of days on market. So maybe what I should have done was stripped out any new builds and seen what the days on market were then. But it's too late now. I'm doing the stats video, so I can't go back and redo it. But we will remember to try and include that in later, and I'll probably put something in the description down below. So that's really what's going on with the days on market. Now, we're about halfway through the video, so if you're getting some great content, if you're liking what you're seeing, definitely leave us a comment down below and ask us any questions you want, and certainly hit that subscribe and like button. So let's get into average. Well, let's look at the amount of houses that were actually sold. So we were 233 houses sold in February. Last month, that was only 162. So great, we're up 44% on that. Last year, that number was 301. So we're down 23% on last year. Now, when we look at the amount of homes that are active, there are 485 homes that were active. Last month, that was 458. So let's call it basically the same. And last year, it was only 160. So great, we have 203% more listings on the market compared to last year. That's great because we've got more listings, but also last year we sold like, an extra, what would that be, 23%. So we sold more last year, there were less on the market. So we've definitely seen an increase of new listings. Because when we look next, I want to go into the sales to new listings ratio. So that at the moment is 76%. Sold 233, listed 306. So we're obviously putting properties on the market, but equally, if we sold more, then we're not leaving them on the market. So we're not necessarily increasing the amount of inventory. Good segue, amount of inventory. 2.1 months. Last month, that was 2.8. So we've gone down by about half a month. So because we sold more houses and we didn't put a ton of more properties active on the market. But last year, half a month last year. So yay, we're up 1.5 months on last year. So when you look at a lot of the trends, you can see that all of the numbers are suggesting that things are getting a little bit easier for the buyers, but buyers are at all-time historical interest rate hikes. There's potentially another one coming next week, but and this is the weird thing. It's like, I did an Instagram video when it was like, yeah, boots on the ground video. How does the market feel? Feels like there's just not a lot of properties for sale. Everybody is still competing on the actual properties that are good and coming on the market. Prices are still really competitive. We're still going over asking. We're still getting backup offers. So all of those 5 things make you feel, when you're actually out looking at houses, when you're actually writing offers, that this is like a crazy seller's hot market. But when you look at the stats, it's not quite gelling. So maybe it's just because of the areas that I'm in, it feels that way. Maybe it's the kind of buyers that I'm working with. But let's look at it from the seller point of view, because what do all these numbers mean for the sellers? Sellers, it's a very strong market still. For good quality houses at a price that is sensible, we are getting multiple offers. We listed a house, I think it was last week, and we had 6 viewings. And from 6 viewings on day 2, we got 3 offers that were obviously competing. And we are kind of working through the conditions on that way. But as I've always said, a house is only worth what a willing buyer and a willing seller would agree to. So if there's issues with the house, as a seller, you're not in that market where you can basically go, well, fine, if you don't want to deal with this offer, we'll just go to the backup. That's like the worst thing you can do. Because you don't know, with the issue that you found with the first offer and the people who are buying that, who have said, for instance, I'm sorry, I want that fixed. Seller says, no, we're not prepared to get that fixed because we're in this crazy market and we've got a backup. Well, here's the risk for a seller with a backup offer. If you say no to the first one because of a problem, you have to disclose that problem in your property disclosure statement, because now it's a material latent defect and you have to let the backup offer people know what the problem is and why the first offer fell apart. That backup offer could quite easily go, well, fine, in that case, I'm out as well. So like, don't be so rigid in your thought process and your negotiations as a seller that you have like absolutely so much power that you're like, well, it doesn't matter, I'll just wait and I'll just get the next buyer. Because buyers are picky. Like, there is still enough out there that they can take their time and get it right. So just be wary from a seller point of view. Pricing and promotion of the actual property, we did a video on that, so check that one out above. Then definitely you've got to get those two right, because that will mean that you're going to get the activity, that you're going to be good on the market, you're going to get the offers that you want, you're going to sell for the highest price in the lowest possible time. But when it comes to negotiations about any items that have been found after the offer's been accepted and you're working through conditions, stick with it. Like, negotiate. You know, don't just carte blanche say, well, we're not doing it. That's not going to work for you. And it also tells the buyers that you are a difficult seller to deal with, and that's not going to work for you. Like, you've got to be collaborative. This is a collaborative process when you sell a house and you buy a house. We collaborate together and we get the deal done and get everybody to a place where they're happy. So there's the little tip. Anyway, let's get into some of the bigger numbers. Like, when we look at the average price point as well, one of the things I like to do is to say, well, look, you know, how strong is this market? Because we know that the 350 to 425 is about the fiercest competition from a price point of view that we've got in the market here right now. But we're still selling houses over $1 million. 10 houses of the 233 that were sold for over $1 million. South End and Bedford, I think it was the Hammonds Plains one as well. So like, it's still a very strong market. Even in the higher price points, those houses are definitely selling. Now, let's look at over asking versus under asking. 98 houses out of the 233, 42%, were sold over asking. 58% were sold under asking. And when you look at that, it's like, yeah, maybe it's just the price points, but that is obviously giving you an idea that we're more or less a sale to list price kind of stacks up to be the same number. So that's another interesting thing to look at. And then almost all of the Dartmouth areas that are in kind of like our Halifax Regional Municipality area were basically over asking. So what does that tell you? It tells you that Dartmouth, pretty much like Cole Harbour, Colby Village, Portland Hills, all of these areas that are very popular in Dartmouth are very popular. Like, and everybody's going over asking price. So if you're looking in Dartmouth or you're a seller in Dartmouth, if you price it appropriately, it's going to be a good experience for you. Similarly for the buyers, like getting there and getting hot. So those are what's going on, like just top level. Now getting to the specifics, we're looking at the number one market. That is East Hants, Colchester West. So we're talking Elmsdale, Enfield, Lance area. They were number one because they had 30 sales. They've got 59 homes active. That gives them roughly 2 months of inventory. Average price point there, $471,000 and a 98.4% sale to list price ratio, but 52 days on market. So the ones that sold had definitely been on a little bit longer. Coming in at number 2, we have Bedford. 25 houses sold, 40 active right there. That gives you 1.6 months. Average price point there, it's come down a little bit at $637,000, but more interestingly, 97% sale to list price ratio there. So there's definitely some area there where people are negotiating down. And I think that was definitely some of the $1 million that were coming off their high price. And 27 days on market, so just under a month. Looking at number 3, we're into Timberley, Upper Tantallon, St. Margaret's Bay area. They had 21 houses sold, 62 active there, so we're up to 3 months of inventory. Average price point there, $556,000 and 100.6% sale to list price, so more or less stacks up average. So that's really what's going on in the market now. We've covered a huge amount of stats here, so we've probably gone quite a long time. So if you've stuck with us to the end, then definitely give us a thumbs up, give us a like, give us a subscribe, put some comments in there, and anything that you want. Like, we can easily go through these numbers in specific details. So if you want that, reach out, send us a text, send us an email. Like, there's loads of ways to get a hold of me, and those are the stats, and let's get working into March.